Okay. So after a good analysis, some breakdowns we gave the last days, gold finally gave us an opportunity to come back and trade before the year ends. We have our accounts CopyFX, the free, and the private service already trading. We're $9 up so far, and let's go back to the chart. So as you can see, yesterday after we managed to well, in this case it's funny because we already dropped the 2000 zone. Okay, so now we are rejecting 2048, that it's also a major zone per 2021 and 2022. A lot of liquidity is in standby there. So as you can see, we have a weak rejection here. It's almost 3 pips rejection. We are currently in a 80 pips trend per our strategy, but in general we are in more or less 2022 pips trend. It's a very decent trend. Let's remember that this trend was, per our strategy, was around 145, and in total was 200 pips. Was also a very decent one, but I want to show you a second one. This one, no, this one was last year around also November. It was at around mid to 8 of November. So you can see we have another big candle that is starting the new cycle for bullish to push up. So we have this push, we have a second session, you can see for 8 a.m. also New York sessions, pre and post New York sessions. So here we had another bull run that lasted until January, February. Actually the first was the second, sorry for that, was the day that it started to drop. So as we can see, we have a clear printed bullish trend, but with a lot of indecision. Even though it's printing new highs, higher lows, you know, higher highs, lower highs, I mean, you know, it's very indecisive of what it's going to do, you know. This was mainly to the hike rates of the Fed all 2023 and part of 2022. So we can see that we had a 288 pips trend this year before any major retracement. We had for example this one 57 pips. We had 2 ones here. This one was very good actually, for 48 pips. But I mean, if you manage to enter a trade here or here, you're probably, maybe here you have a good average, you know. Yeah, everyone can be able to do a good progression here. But if you got trapped here, boy, you need to be able to hold the whole move. Actually, we got trapped here. We managed, well, actually the new algorithm was able to close here, but we were using the old version, so we were trapped until last year, and that time we closed 15k, I think, around 50%. So, well, holding was worth, but also it was a 3-month swap. It was very long holding. So I don't want to face that reality again. It's not needed, you know. It's better to keep chasing trades with no losing positions on, for example, that price. You can see it's 1666. We're not going to see that price again, you know. So it's simply something that you don't want. You want a good average that you can close here, but because you enter here. So that's what we are doing this time. We in this situation, as you can remember, here is where we printed our last NRP, and our new NRP is here at 1971. As you can see, we have a very good volume push. This is what we're saving ourselves from trading. So we started here actually, where we have the red line. I'm gonna put it green. It's where we have the reaction. That's when we started the EAs. So this is our main account. It's a demo account because we don't use our main account as the main as the trigger, let's say. This is the Explorer, so this is the account that printed the NRP at 1971, so that's why we waited for more or less 248 when we opened level 7, so we can trade again. And currently, as mentioned, we're up $9. We managed to close already. By time, we already closed $5 and 2 orders with almost $2. No swap, so very clean trading, and we need to keep chasing this market because today we don't have any major news. We have GDP, but honestly I don't think after yesterday consumer data that, I mean, we know what's the situation with USA and we know that price is bullish. This rejection of 2000 and no retest is unique, you know, it's not very common that this happens. Every time we reject or we retest and we go back, you know. But recently we're just pushing up, and this looks like a very healthy retracement to continue up. So consider something ranging from here and going up, because at least a double top here looks it's because you can tell that there's more traps, more traders trapped here than interest from going back to 2000 after so many let's say so many fake outs in these areas. And with the situation of USA and the maybe, and well, in this case the situation where the Fed is going to slow down the rates, wait, we don't really know, but maybe they will do it. So there's a lot of smart investors that are changing positions for the end by the end of the year, so they can squeeze a little bit of profits here and then change to dollars. So just be smart with your positions, keep your levels well marked, and keep your portfolios safe. Done.